I'm Edward Warfield. I'm the publisher of City Biz, and I'm honored today to interview Jim Davidson, who's the chairman and CEO of Coral Gables Trust. Welcome, Jim.
Thank you very much for having me, Edwin. I appreciate it. Look forward to speaking with you.
Can you provide an introduction to Coral Gables Trust, the assets under management, offices, and any other sort of key metrics that you want to share?
Absolutely. Yes, we started the company in 2004, I and a co-founder, and we decided to not only manage investments for clients, but also we decided to get licensed as a trust company to provide trust and wealth management services, and then financial planning as well. So we started right here in Coral Gables. This is our headquarters office. We've been here since then, same location. But since then, we've expanded and we opened an office probably 7 or 8 years ago in Fort Lauderdale and Las Olas, and have since expanded to West Palm Beach and to Boca Raton. And increasingly, those offices have caught on, and we have clients in those areas, and things are going very well in that respect. The reason we started the company is we did some market research and interviewing when we before we started to see how we could differentiate ourselves. And I found out in talking to friends and others that clients that don't meet the minimums of the big guys, which can be $15, $20 million, they can't work and have access to world-class managers that the big guys have access to. And generally, they're working with a broker at a commission house paying commissions rather than asset-based fees, which has become the standard for fiduciaries, which we are, of course, being a trust company. And we do believe in in active asset management. I think it's been more successful over time than indexing and passive investing. So we went that route. And so we select managers, they call that open architecture, that best fit the desires and the profile and the needs of our clients. And so that's the main difference between us and back then, what we started doing then, that other people had to go to a brokerage house or buy a CD at the bank. And so that philosophy's carried us very well. And we started offering this to clients with at least $500,000 to invest up to the target range of $2 million. Although that's not to say we wouldn't be delighted to take a lot more than that on the upside. And we did get a few, but that was the way we started. And it was very well received, and we grew over time. We got up to close to $500 million just before the financial crisis, and it hit, and for many varied reasons, we went back down to $200 million. And so we made some changes along the way after that, 2010, 11, which can get into later. But that really made a difference, the changes we made, because since then we've grown very rapidly. I'm told more rapidly than any other trust company in the state, and certainly in South Florida now, we're the largest independent trust company and locally based, and we have assets of over 1.8 billion. So we've got a pretty good growth curve. We're doing very well and doing some things right.
Your career included 20 years at Goldman Sachs, and then you established Davidson Capital Partners, and then you founded Banyan Investment Partners. Can you walk us through your career prior to founding Coral Gables Trust?
Sure. And I look back on my career, and I've been very blessed and very fortunate to work with some great people, to learn from them. But along the way, made a lot of friends, but learned a lot about some different areas. And I started at Goldman Sachs in 1970 after graduating from Wharton Business School, got my MBA, and before that Vanderbilt. And I grew up in Alabama and just seemed like I worked my way north to Nashville, Vanderbilt, Philadelphia, New York. And I wanted to work back then. At that time in the early 70s, there were a lot of really hot IPOs going on. And there was a particular small firm that I wanted to work with that did more IPOs than anybody else. And so I interviewed there, and back then the colleges, the MBA schools didn't do much interviewing on campus. You had to just find out who the heck they were and then write them and send a letter and listen. So anyway, I didn't get a job with the hot IPO firm, but I did get an offer from Goldman Sachs and a couple of other firms, and did a little research and decided I might be better off with Goldman Sachs longer term than a hot IPO firm. And I was correct. I think they were out of business within a year. So I had a wonderful career at Goldman Sachs for 20 years. I started off in corporate finance and then moved up to opened up in business development in the Southeast. And actually looking around at the time, I was probably the only person at Goldman in investment banking at that time that could speak Southern and understand what they were saying down here. So I did that and was fortunate to have a number of clients in Miami and Florida, Miami in particular, and always had sort of an entrepreneurial spirit. And when I went to New York to work, I thought I'd work on Wall Street for 2 years and then head back south and do something entrepreneurial. But anyway, it was a wonderful time. And so after 20 years, I said, I've got to make the move. So my initial move was to come down, and I started a broker-dealer, mainly doing M&A transactions. And I did that for 3 or 4 years. And then a friend of mine, Don Burton, who ran South Atlantic Venture Funds out of Tampa, he had built up a fine. It was the largest and the best venture fund in the state. And he had been after me to come work with them, but I wanted to do my own thing. But finally made me an offer I couldn't refuse, and I joined their fourth fund as a partner, and we had some really good investments there, and helped. I feel like helped out Florida and the economy by making some good investments. Incidentally, we were focused on telecom and technology and software, but our best investment overall, we were able to be the first institutional investor in Outback Steakhouse 6 months before it went public. So that was our best investment of them all. So that was good. So anyway, we were winding down the fourth fund, and Don decided he didn't want to do a fifth fund. So I was thinking about something else to do, and met a couple of guys from Bank of America in the lending area. And I've heard about mezzanine financing, and they had. And so with another partner from that had previously worked at Goldman Sachs, we started Banyan Mezzanine Fund, which is an SBIC, which means we were backed by the SBA. And so we raised the fund about the same time. I and a friend of mine started Coral Gables Trust Company, but I was working full time at Banyan and chairman here, and my friend was CEO. So anyway, Banyan started then, and we made, we're trying to focus on Florida. That SBA wanted us to do that, but we had a few very notable, successful companies down here, pizza franchisee here in Miami, but then we had a company in Orlando called Zero Chaos, which was a different type of staffing company. They sort of managed staffing companies for like the likes of IBM and AT&T, really large firm. They managed the different types of staffing companies coming in. Anyway, it became a $2 billion company and was eventually sold to Carlyle, and did very well. And then we did a software company up there in Orlando, and another networking company working with companies to set up their telephone and IT networks in Tampa. So those were three I remember in Florida, but others we invested from coast to coast. Banyan actually, we did two funds, and then one of the partners decided to do something else. And by that time, had gotten more involved in Coral Gables Trust Company. So I left the fund as a partner last year, and my two other partners are winding down the investments we have, and they'll probably do another fund in the future. But so that was sort of my career, and then with Coral Gables Trust, I've been fortunate to learn about the add-on to the learning I had to the wealth management business and trust in the state. So kind of interesting and career to cover 6 different areas of industry and learn a lot. Just meet a lot of wonderful people, and so it's been a good run, and I'm going to keep at it for a little bit.
So who are the key members of the Coral Gables Trust?
Yeah, we have sort of a lean organization. We have 35 employees. So I'm CEO, and then have 4 key managers, starting off, I guess, with Richard DiNapoli, who's our Chief Trust Officer, who came in probably about 8 years ago, and then John Harris, our Chief Wealth Advisor, and he's probably about 10 years. And then Mason Williams is our Chief Investment Officer, who came over from another firm here in town, and he's been here about 5-6 years. And then last but certainly not least, Dominique Alexander, who had been our controller for a while, having come from an auditing firm, and she took over as chief financial officer and HR manager, and she's a younger lady and just does a magnificent job for us. But the key thing, I believe, they all just work so well together. They're experts at what they do themselves, but working together as a team, and the culture we have, family culture here with a small firm, really makes it work well.
And so is your growth strategy going to be organic or inorganic? Do you have the acquisitions on the horizon?
We've looked at several acquisitions in the last few years, and keep coming back to the fact that we struggled for the first 10 years when we weren't making money, and then we now have a pretty good balance sheet. And one key thing, we don't want to mess it up by doing an acquisition. And then the ones we've looked at have been could have strategic value geographically and pick up some new clients, but the prices lately in the asset management field have just been out of sight. We're just not willing to do that. But in each case, in looking at those, we'd be picking up and paying for things we really didn't want. In a couple of cases, real estate of offices and that weren't just right. And we believe in renting, leasing office rather than owning real estate and tying up that capital. And then we've got things pretty well set here. Our back office is really Schwab, which we work with. We were their first company on their trust platform back in, we switched back in 2008, I believe, and used them. And they're our custodian. I think they're one of the largest custodians in the world, well trusted. So that gave us a real stamp of value and a solid standings, good reputation in that area. So we use them, and again, we pick the best managers around the world. We've worked with a company in New York called Folio Dynamics. They recently have been sold, but they research 25,000 asset managers around the world and give us a list of I guess 200 or so on a regular basis, always updating. And then we have an investment committee here of about 6 individuals with investment experience, and we pick out maybe 25 out of the 200 of the best of the best. And in general, we pick very active managers, not passive, but in some cases people like index funds and passive managers and ETFs and whatever, and we work with all of them. So anyway, we have our system set up, and again, we don't sell anything. We have no internal product to sell, no add-on costs that the client sees, and so some of these that we've looked at, you just have to change things and I would say if it ain't broke, don't fix it. So what we are looking for, though, is good people all the time, and including producers, that people that are with another firm or RIA or whatever, that maybe looking for more entrepreneurial spirit and ability to own. Our employees and our directors and other local investors own the company, and we try to spread the wealth. And our employees often say, at first we said, forget the stock options, we just want the cash. But once they realized and saw the value increasing in the stock, they said, yeah, it gives us real pride in the company, and I feel like I'm working for myself. So that's worked very well too. And so anyway, I digress a bit, but mainly we're looking for producers that have some book of business but are very aggressive, which we are in the community, getting out and selling. And so we'd prefer to do that. And geographically, if we can find the right people, we'll go to Orlando. We like the Jacksonville area, Ponte Vedra, Naples. We have a number of contacts and clients over there, so it'd be good to have somebody on the ground. Even a city like Nashville, which is one of the fastest growing in the country. If we find the right group up there that we can work with, we'd love to do that. So, yeah, our plans to grow organically and not do an acquisition that would have to overpay for and then regret later.
And so what are your thoughts on the allocation of growth versus value in today's market?
We start when we have a new client to tailor-make a portfolio for them. We have them work with them on a number of questions. As what is their plan for the rest of their life financially? And most people say, well, I want to make a lot of money. Well, what are you going to be your needs over a period of time? So we offer our clients right in the beginning to do a financial plan for them and look at the assets they have, the expenses, the family, everything, what are you going to need, and give them a financial plan that we can help them meet their goal of having financial independence for the rest of their life. So that's where we start, and then we have a lot of talk with them about their risk aversion. And some people can take the ups and downs from a financial point of view and from a mental point of view, and be able to sleep at night, and others just can't do that. And then you of course look at income versus equity growth or whatnot, for the growth. And so you come down to the growth versus value basically. And so we custom make those portfolios for them. So people, when you get through that, it sort of comes down to value versus growth, depending on what their needs are. And as you well know, growth has been the leader for the last 20 years or so, or more, maybe. And we've had periods where growth has flourished well, as they had the last 2 or 3 years, and going back to other periods. And then there's a fallout, and things correct, and people, clients, and others have to have a stomach for going through that. So we did very well with focus on growth last few years, and basically getting to know our clients. They sort of let us know which camp they want to be in given their needs. And so growth did very well last year, and then it did for a couple of months this year, and then the value crowd took over. We have a good balance on our investment committee of a couple of guys that run the funds themselves versus the growth crowd. But the two value guys, we always have a very healthy discussion of where we're going, and that's what's next. So anyway, in February, the value crowd took over and had a great run. It's measured by the Dow for one, and NASDAQ didn't do too well. But lately, in the last 2 weeks, it's coming back. So what we take from that all is to have a diversified portfolio with a slight bent to the person's needs, their gut, what they can take, and what income they need. So, but our belief is that Inflation is pretty torrid right now, affecting a lot of different industries one way or another. But we think because of the pandemic and people being shut down, their buying habits have changed. There's a lot of savings going on, especially with the government checks being sent out. And I think the savings rate on average got up to like 21% from a norm of 10%. So there's a lot of pent-up money out there, and I think those of us that really favor growth, we're going to do very well this year. And as we're going on into the second quarter, should be very good earnings-wise, and the value people will too. So I think it's going to be a balanced outlook for the rest of this year in terms of where to find profitability and your investment portfolio.
And you've been involved in the Florida Venture Forum, and I remember when it started a couple of decades ago. And can you tell us about your role in that and the impact of capital in South Florida?
Yeah, I came down in 1991, and the venture community in Florida was pretty weak then. I mean, like I talked, Don Burton had the Florida had the South Atlantic Venture Fund, and it was the largest, and there were a few others at that time, and then it grew slowly, very slowly in the 90s. And so at some point in the mid-90s, I joined the Florida Venture Forum, which was headed by people like my friend John Cole of Davidson Angel up in West Palm Beach, and a few others. And so it was difficult back then to find good investments in Florida. You really had to look afield into other areas. I remember back then, especially if you want to look at the Southeast, Nashville was the hotbed of healthcare and still is in the Southeast. And then North Carolina had some good things happening, and then Atlanta, probably more venture funds in Atlanta for the South then at that time as any place. So we had to travel a lot to find them. But so I worked very closely with it. I was chairman in 1999, I believe, and we had these venture capital conferences held at the Biltmore, and at some point we outgrew the Biltmore and had to move to bigger places, but it was a sort of a slow go. And then I think through the early, decade of this century, things didn't change much, but lately it's really come alive, especially in Miami. I believe, one of the funds I know best is Ocean Azul, who is doing very early stage seed capital here in Coral Gables, and they've done very well. And there's some others, but recently South Bank, a huge Korean-based fund, Japanese or Korean, I think Korean, they visited here, and I think they're opening an office, and others are too. So I think there's going to be a real happening here in Miami. Our mayor of the city of Miami, has been getting very close to Silicon Valley, and companies are being recruited and to come here. And so I think the future is bright for venture capital and private equity in Miami and Palm Beach is booming as well. So I think the South Florida is going to become really a strong place for alternative investments in the future with the tax advantages and the hedge funds moving down. And I think it's a pretty bright future for us in South Florida.
So is there any part of the Coral Gables Trust story that you haven't shared with us that you'd like to end on?
Yeah, I think one of the things that really stuck in my mind, it was a difficult time right after the financial crisis. We were just at a low, and our capital was dwindling, and we had sort of a split board. Some wanted to say, well, let's give it up. We've given it 6 years. Let's sell it, what we got. Others of us wanted to carry on. So we decided to carry on, and we had to raise a little bit more capital, not that much, but really we changed our philosophy, I think, which was a real turning point for us in that primarily we've been soliciting individual investors and family investors for our trust and wealth management services, but made a new hire. Actually, I'll give credit. John Harris came in, who had had a background in business development down here, and he had been working the COIs, the centers of influence, the attorneys, the attorneys and the accountants who are dealing with clients, and when they have needs, they reach out. And so started building a network with the COIs, and all of a sudden the business started coming in. And then we agreed, which most trust companies won't do, is to manage the trust. And there's a lot managing a trust, setting it up properly, talking to the client, what are your needs for when you pass away, and all the details of asset protection, so many things you go through, and then administering the trust going forward, paying the beneficiaries' bills, and getting the tax return filed, and everything that you do in the trust business. Many of the many of the trust companies, period, wouldn't do just that without also managing the money. And we decided, well, a lot of cases, the need for this, where particular individuals would want to have those two separate individual producers and asset managers, financial advisors rather. So we started that, and it really spurred our growth on to been growing very rapidly, and go from 200 billion under management to over $1.8 billion where we are today. So I think that was a real milestone. And the other key then for us is we're very focused on serving our clients. All of our senior people are here locally, and so we can make decisions. I can call a committee meeting, a trust committee, to take on a new trust in the middle of the night, and we can give the client an answer with less than 24 hours. And then we're flexible too. Many of the big national firms have their own blueprint, and the trust will allow assets that are publicly traded. So they love publicly traded stocks and bonds. They'll take real estate as a personal residence, but not income real estate or raw land, for example. Artwork sometimes comes in, and we've had experience in evaluating art as in part of the portfolio. So we're very flexible in trying to serve the client's needs as to what they want to put into a trust. It takes more work. You have to have a more varied background to be able to get a valuation on that. And but the other firms that their headquarters in some northern city, the guys up there call the rules, and we'll do this, we'll do that, but we're not going to do the other. So I think a lot of the centers of influence now, I know they have in recent years, have said, if you need flexibility, go to Coral Gables Trust. They'll work with you on a local level. And then we require that every client gets a call or a meeting on a regular basis, sometimes monthly. And during the pandemic especially, we got a lot of good feedback from clients that they couldn't get in to see their advisor because their offices were closed. We stayed open through the whole pandemic and called clients regularly. Just nothing in particular, but how are you doing? Can we help out in any way? And I think that got around the community and was really helpful to us and our clients.
Well, Jim, I want to thank you for sharing your panoramic career, and we wish you the best of luck with Coral Gables Trust in the near future. And we wish you the best of luck.
Well, thank you very much. I enjoyed it, Edwin, and we love the community we're in. We love serving the people, and so thank goodness we're here to stay. The other thing is, in closing, we're not for sale. We've had many inquiries, but some of the larger trust companies that have been around for over 100 years, they know that relationship between the client and the customer is all important. And if my clients had to wake up one morning and read that so-and-so national firm out of New York had acquired us, it just wouldn't be right. So employees, shareholders, everybody's committed to that. We're here to stay. Long past I'm here.